Hello and welcome to Views from the Market, mid-market private equity and M&A in Canada. My name is Mario Nigro and I'm a partner in the private equity and M&A group at Stikeman Elliott. For today's podcast, I'd like to welcome our special guest, Jeff McCain. Jeff is the president of Woodward Capital. Jeff, thank you for joining us and welcome.
Thanks for having me, Mario. Great to be here.
Jeff, we always start our podcast by asking our guests to tell us a little bit about themselves, a little bit about your background, and a little bit about Woodward Capital. So I'm going to start there.
Okay. Before we jump into that, Mario, I do want to say congratulations on the podcast. It's been a lot of fun watching it progress and to all the success you've had with it. And again, for, your advocacy of the Canadian middle market and the search fund ecosystem and keeping the spotlight on what we're doing. So thank you for that. On me. Okay. So 30,000 foot overview would be originally from the East Coast. I was born in New Brunswick, spent my first couple years there. My parents ended up moving to Toronto at a pretty young age, right? So my sort of formative years of schooling was in Toronto, middle school, high school, and ended up at Western University. And so did my first 2 years of poli-sci there, jumped into the Ivy Business School, and not surprisingly, coming out of that program, landed in investment banking. So, which is pretty common coming out of Ivy. Didn't do that in Toronto. I actually moved to New York pretty shortly after I graduated. Spent 7 years or so in mergers and acquisitions, was a generalist that whole time. I split between two companies, Atlas Advisors and Goldman Sachs, and always within a private equity strategic advisory role, working across a whole bunch of industries. So spent a number of years there. Really enjoyed it, but needed a little bit of a pivot point in my career. And after a small stint in California at a fintech business, I spent a couple of years in the UK where I did my MBA. And then after I graduated, decided I was at the 10-year mark of being gone and was ready to come home. And that was the genesis of Woodward Capital. I started the firm right after I graduated and launched it right here in Toronto, where I'm based now.
Jeff, I've had the opportunity to see the kind of deals you do with Woodward, and maybe tell us a little bit about what Woodward's all about for you in terms of its investment thesis, its philosophy, the sweet spot, as we like to say, for Woodward.
Yeah, candidly, Mario, it's progressed significantly over the past couple of years. The original thesis at its core was a traditional self-funded search, right? I was looking for one operating business to sink my teeth into, jump into that in an operating role and continue to grow that business. It didn't play out that way. And I'm actually happy that it didn't play out that way, because once you enter this ecosystem, you start to realize that there's just opportunities all over the place, right? And I quickly gravitated towards other people that were searching, supporting them, learning about the institutional capital that actually funds and backs this industry, right? And I ended up participating in all aspects of the capital stack, right? I'm an investor as an LP in 5 institutional funds that invest predominantly in Canada, the US, and Europe. An investor in 2 traditional funds and have participated in a number of equity gap situations over the years. And that was all outside of my search, right? And so it expanded quite a bit within me personally and what I was looking for from a search perspective. I ended up spending a lot of time in the trades. So lower middle market trades-based businesses, blue collar companies, not surprisingly ended up acquiring an HVAC business, which is rather common in the search fund space. So we've been having a ton of fun with that one. I'm not an expert by any means, but I'm learning more every day, and we're finding interesting ways to grow that business organically and through M&A. So it's been a fun ride so far.
In that HVAC business, just for a moment, is HVAC commercial services? What's the focus of the HVAC business for?
Right now, we are 100% resi. So it's a 100% residential business. That is going to change, right? There's a few things we're working on that you're aware of, where this split is no longer going to be 100% residential. It's going to be much more diverse across commercial, industrial, and resi. So the makeup is going to change over the next couple of months. And so there'll be some new things to learn on those different files, but we're really excited about it. It's a natural transition anyways. This was always where we were rowing.
Can I ask you, Jeff, you bought this HVAC business not too long ago. It's a lower middle market business. I mean, as you know, there's a lot of people doing HVAC. You still like this business? You still like this space? You know that there's a lot of activity in the space and multiples have been going up even for the smaller stuff. What is it that attracts you to the space? What's the opportunity to see? I know you're doing a buy and build here. Without giving away your secrets, I don't want to give away the secret sauce, but if I can ask you why, one could argue you started late compared to some of the other people that have been doing deals in the space. There's so many of them, as you highlighted. What is it about the space that attracts you? What's the opportunity you're seeing in front of you?
Yeah, so I'm not an original thinker on this. Like, full disclosure, like there's lots of people that have gone down the search path and acquired HVAC businesses. I'm not unique in that regard, but I think my angle of attack is certainly unique. There are other searchers who have bought and sold businesses in basically the time frame that I've owned my business. And that's really fast, right? Like there's some pretty significant activity. For me, what continues to be the focus is largely retirement driven sales, right? So family businesses, founder-owned businesses, that there really is a succession challenge in those companies, and finding way to partner with sort of the next gen of leadership that exists in the business, or work with the existing owner to get a new GM in that business, right? Because I can't actually personally run, multiple locations at the same time, right? So I've got a great GM in my business now, and that's required for future add-on acquisitions. But the industry itself is very, very favorable, protected from a lot of technological change. And these traditional services companies are just incredibly durable in their business models, right? Like we tend to do a lot of work, which I would put under the essential bucket. And that allows us to use technology in appropriate ways to update our systems, our processes, all of the normal stuff you would want to do in terms of biz ops and operational improvements. But the actual sturdiness and steadiness of the industry itself is very stable. And for me, stable, not sexy is actually where I like to spend my time, because you can build incredibly long-lasting portfolio by sticking to that knitting and just executing it with a really long time frame, which is what I have here. So,
Jeff, if I can, one more question on the HVAC space, just because there's so much activity in the space. Are you seeing, you're obviously focused on the lower middle market.
Yeah.
Are you seeing multiples go up or expectations from sellers rise? Are you also seeing a lot of competitors on these deals? Are you finding these, are you noticing the competition? And we always hear about, there's so many people looking at HVAC. Do you see it on the ground?
I definitely see it on the ground. Most of the new searchers that I talk to, Mario, and both of us have the pleasure of talking with a lot of folks that are making the transition into this, ecosystem. They often find HVAC businesses as well. There's still a ton of them out there. It's still incredibly fragmented from my perspective. Multiples have changed quite a bit in the last few years. When we're talking about peak 21, 22, there was an insane amount of activity candidly at multiples that don't make sense to me, right? They still don't make sense to me. I would not do those deals. I don't think you should be paying 7, 8, 9 times for a $500,000 EBITDA HVAC business. That's a personal view, but a lot of people that are fellow owners share that view from what I've experienced. There's still so much consolidation that needs to happen, Mario. And my experience on the brokered versus proprietary, my original business was a brokered acquisition, but I sort of swept in there and did a 1-to-1 deal, right? I was fortunate enough to not compete in a broader auction. And everything subsequently after that has been proprietary. Once you're in the industry, it's just so much easier to find people that are a good cultural fit. And you say, look, I understand what you're trying to do with your business and you want to retire. I like the culture that you've developed, and I think it would mesh well with my business. That resonates with owners, right? Like they don't necessarily want to do this, dog and pony show around an entire market and have to expose themselves to that. And it takes away from running their businesses, which is what they're used to doing. So we focus on that lens and just try to keep repeating that. And it's been successful so far.
Jeff, what I've noticed, obviously you're a long-term, you're not a traditional private equity fund. Woodward wasn't created to kind of get stuff quickly, buy, grow, and sell in a, race against time. And so I've seen you look at a kind of wide variety of sectors, industries. Tell us a little bit about your focus and the sectors you're interested in.
Sure. The primary focus has been broadly around infrastructure, commercial, industrial services companies. I know that's a mouthful, and that does intentionally cover a very broad sector of businesses and opportunities. but most of them still fall under this sort of traditional infrastructure maintenance, essential services mantra, right? Which is where I like to personally spend a lot of time. And, leading up to the acquisition of Designair, I looked at a ton of plumbing and electrical contracting and HVAC, of course, power line services businesses. All of those had similar overlapping elements of durability in the business models that were attractive. And a ton of them just circumstantially happen to be owned, certainly the smaller ones, by founder and family owned dynamics that are actually a really good fit for the lower middle market and traditional kind of search fund investing, right? So we've continued to do that. And that dovetails a little bit into what we're doing in the family office, Mario, because that's a similar lens that we're taking to the new fund we're launching in the family office. And it's just, we're going to be doing bigger deals, right? It'll be similar type of areas of focus, but larger transactions than I would do at the Woodward Capital level, which is frankly my personal holding company. And so the bandwidth for doing larger deals is not there. So when we look at some of these 5 million plus EBITDA companies, that falls into the family office bucket versus Woodward Capital.
And could I ask, Jeff, what's the name of the new family office and what's the kind of sweet spot then for that family office? What are you looking for under that banner?
So the new fund in the family office, which is maybe describing it as a new fund, it's permanent equity. There probably won't be a fund two. It's just an initial pool of capital that we're going to dedicate towards this thesis. It's still borrowing a lot of the lines of the heritage of what I've been doing in Woodward Capital around critical infrastructure services and business services companies, just larger in platform size, right? As opposed to, a $500,000 or a 1 million EBITDA business. We tend to look at stuff that is 5+. And the makeup looks a little bit different too. It's coming from our family office mothership, which is JSM Capital. And this would be sort of a subset of that, right? It's going to be the private equity vehicle that sits and lives underneath JSM and has the support and backing of the family office team. And my siblings and my dad are also directly involved in that versus Woodward Capital, which is very much an independent vehicle, right? And so it's a great opportunity to kind of double down on what we believe in around this particular mandate. And it'll be the first time that I'm working, directly with some of my siblings on this file as well. So it's been a lot of fun so far.
And JSM sweet spot would be 5 million EBITDA plus 5 million.
Correct. 5 million to, we have a mandate around platforms being in the 5 to 15 million range. And our view on this has really been to build scale through acquisition, right? Through organic, through M&A, through consolidation. We're not looking to buy 40 million EBITDA platforms. It's just not the place we want to start. We like starting with something a little bit more tangible, a little bit smaller, with more of a growth equity mindset, right? Knowing that there's going to be an opportunity to deploy that capital in a really smart and efficient way, as opposed to buying, a 40, 50 million EBITDA business, which has attractive cash flow dynamics typically, but perhaps the buy and build strategy is a little harder, when you're starting that size of the market.
And Jeff, this would be majority positions?
Correct.
Majority positions, 5 to 15 million EBITDA. Infrastructure services would be the kind of core sector.
Absolutely. Maybe a couple nuances in terms of what makes us a bit different around what we're doing in the family office. We are genuinely looking to partner with founder and family-owned companies because my own personal background aligns quite well with that culturally. We're used to doing that type of investing, at Seaport Capital, which is a different entity, but we've learned a lot from doing that since 2012 and being in the private equity space and had the pleasure of growing that business over time. And so we kind of are borrowing from some of those concepts, but redeploying that in a family office context, right? Which is, I think, the right way to do it. And my investment horizon on this is, 20, 25, 30 years. Doesn't mean we're going to own these businesses that long, but we can do that with that sort of permanent equity lens that is, I think, very, very normal in family office investing.
So again, I want to ask you, we don't often see what I would say is a kind of middle market private capital fund doing infrastructure or infrastructure services. Can I ask you what the sweet spot is for you? What is it about that sector that you like? I know you've been focused on it for a while, but what is it that you see? Where's the opportunity that you see? And frankly, I'm going to speak out of turn. I think part of it is probably the fact that there's not that many people looking at these companies because a lot of private equity firms won't go near those businesses for a whole variety of reasons. That might be it, less competitive. But is there other factors in terms of why you're interested in this particular space in Canada that attracts you?
Yeah, I fully agree though, by the way, Mario. I mean, it is less competitive. I think it's less in general. There are probably fewer opportunities to do the buy and quick flip that might be required of traditional private equity, right? And some of these more industrial manufacturing or industrial services, infrastructure services, commercial services, all of them touch on similar sentiment of a type of business model that to us is really attractive. And we just see that there's a lot of opportunities in Canada to support those companies that are going through those transitions. And we want to be there to do that, right? It's coming in at probably some slightly more attractive multiples than other sectors you might see in pharma, healthcare, some consumer, certainly tech, right? Those can be very strongly built-in multiples that you're competing in a completely different type of investing industry. So we're more of the growth equity buy and build, which these industrial assets are all around us, right? And I think that's what actually is the most attractive piece, is that their fragmentation across these sectors is immense. And we still see a multi-decade opportunity to build regional, national, international champions. We're strong believers that the management teams will remain in Canada, but we will do add-ons in other geographies in the US if it makes sense to do that. But the platforms and the leadership teams will be based in Canada.
Jeff, I always ask our guests, you're obviously out there in the market, with a broad base, searching for businesses, like you said, for Woodward, but also for JSM, like you're both sides. Where do you see the market going? I mean, obviously we're dealing with tariffs. We're dealing with a lot of these external forces that are affecting the ability to get deals done. What's your perspective on where you see the market going from where you're sitting and where you're doing?
Yeah, I might actually bifurcate that a little bit because there's two slightly different answers when I think about what I see at the Woodward Capital level, right, which is the lower end of private equity in the middle market, and then more in the traditional private equity size range where JSM Capital is competing. I think it's a slightly different answer. But when we're looking at these succession-driven sales, what's going on with tariffs, geopolitics, and all of those things that genuinely have a real impact on deals, deal processes, timing of transactions, that doesn't change the fact that most of these are retirement-driven sales, right? And so there's not an infinite window to make that transition happen. So I'm seeing a strong willingness, despite these challenges and these headwinds at the lower end of the market, to continue to get deals done. Sure, in 2025, people were very cautious, rightfully so, but we're going to need to get deals done, right? We can't sit on our hands for multiple years, and people are starting to recognize that in 2026, and we're seeing things happen. I think in the more traditional private equity market, you're seeing it much, much slower to get back to quote unquote normalcy, where private equity firms themselves are very hesitant to do deals, right? And are dragging out timelines for getting things done. Fortunately, that's a family office vehicle we're investing out of, and we do not operate in 2 to 4 or even 5-year timelines, right? We look at businesses and we say, what can we build and be proud of over 5, 10, 15, 20 years? That's a very, very different mindset when you're underwriting the investment thesis of these companies. And so that's actually been a huge competitive advantage for us in an area where we can differentiate to these owners, where we provide that majority recap stability, but also very supportive of a long-term transition that in many cases, the previous owners will keep some skin in the game and participate in that with us, which we're pretty excited about.
Jeff, I want to thank you for joining us. It's been great to hear about the evolution and growth of Woodward, but also to hear about JSM. I have a personal interest in the sense of wanting to see more private equity firms in our marketplace, because as you know, we don't have enough in the mid-market. So it's exciting to see another long-term thinking private equity firm, or private equity capital investor that's joining the market. So excited for you and excited for JSM's future in our marketplace. Thank you for joining us. Thank you for telling the story, and best wishes on the fund.
Thank you very much, Mario. Appreciate you having me. Great to be on the pod and looking forward to seeing you out there in the market.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.